Hello friends, I'm basically bringing you a video on how to identify the current market trend. In an earlier video, I had basically shared how to identify the market structure, whether you are in a bull trend, a bear trend, or range bound, using higher highs and higher lows. But for example, if you are a newbie, a fresher, and you don't know much about the market, right? So it becomes very difficult to identify the market just looking at higher high and higher low if you're not aware of the concepts. So I'll be basically talking about a very simple concept to understand the what is the state of the current instrument you're looking at. So here I have ITC here, and I've got a couple of moving averages like the 9, 20, 50, 100 and the 200 moving averages plotted out. Now, if I didn't know the concept of higher high and higher low, how am I going to basically identify whether this instrument is in a in a bull run, in a bear run, or is it range bound? So I've got a daily candle here. I'm using the candlesticks, normal candlesticks, right? So if you see here, this blue line is the 9 EMA. This is the 20. This is the 50. This is the 100. And this is the 200. Now you'll wonder why you are having so many moving averages. Your choice whether you want to use a simple moving average or a EMA. Since the EMA is more responsive, I prefer to use EMA. It's a personal choice. If you see here that the price is consolidating for a bit here, price consolidated for a bit here, and see here, it's just consolidated for a bit here, and then price it was it came below the 9, touched the 20, broke below the 20. Again, range bound here. In fact, this whole thing is consolidation because if you see here, it's going up and down. If you see here, I marked the low here and the high here, which is the highest point. It just goes crisscross, right? And then you have a double bottom pattern here, and finally, price is breaking through this consolidation with price breaking through this consolidation with some volume. If you look here, you have good volume here above the average volume, and then price finally goes above. So when the price is above all these moving averages, and if you see the moving averages are basically moving upwards, they are going up, meaning they are just taking off, right? Like a plane takes off a runway. So we can say that this instrument ITC is in a is right now in a bull phase. Here it was in consolidation phase because it wasn't going anywhere. It went up, it came down, went up, came down. Then again, a lot of bull and bear action. And if you see the EMAs, they are both squeezed together, the 9 and the 20, and they finally broke through. As you see here, now there is a distance between the 9 and the 20, 20 and the 50 and the 100 and the 200. So it is clearly this instrument, ITC, is in a bull run. Then finally, if you see here, it starts coming down. It's broken down the 9, the 20, even the 50, and has taken support of the 100, but not for long. It breaks the 100 as well, which is very bad. And uh, for uh, for investors or traders who had medium to long-term positions, if they kept it, I don't know where they got in, but if they got in here, they would have gotten out here. They would have gotten out earlier. If 100 was their breaking point, they would have gotten out here and made some profits. But if you came here, and if you waited this time, you would have lost a lot of money. So basically, price is broken through below the 100 also, which is very bad, even for medium-term investors, and then it goes up again. So there is no clear direction in this stock here. It goes up, comes down, goes up. It's broken the 200 as well, which is as bad as it can get. That means the long-term average, the 200 EMA, which is basically sort of almost an entire year's worth, is broken down there. and it's come down here. And then again, if you see, all the EMAs are bunching together, and now finally ITC is going up. So, what can the moving averages tell you? So, for the short term trader, the 9 and the 20 is basically the price has to stay above the 9 and the 20 EMA. If then it's in a bull trend. If the price goes below the 9 or below the 20, it's in a short term bear trend. If it goes below the 50, it's in a short to medium term bear trend. And if it goes below the 100, all hell is broken loose, and you're in for a real bad state unless the price goes up again. But if you see here, it went up again to come down. So the stock is not basically, it's not given the returns that investors wanted, especially those who didn't get in earlier, and is sort of range bound, but it goes up and down. Now let's look at another stock, Godrej Construction, consumer. Uh, so here, if you see here, the price has gone up, come down, taken support at the 200, and then it's gone up. And as long as it's above the 9 and the 20, it's in a bull trend. And again, there is a lot of consolidation and a lot of fights going on between the bear and the bull. And it takes support now at the 100, even breaking the 50. And then luckily, it has not hit the 200. If you see, all the moving averages are moving upwards. And so this stock is definitely in a bull trend because although it comes down to spike, you can call it a pullback. It allows traders to get in at an appropriate interval. So I've just zoomed in on the chart. So if you see here, this is basically a stop hunt where all the weak hands have been taken out, and then the price goes up. And again, then there is a stop hunt here as well. Not as brutal as this one because this went below the 50 as well. But if you see here, it's taken support here. So traders could have gotten in here with an appropriate SL. So this is in a bull trend. Now let's go back earlier. Let me let's go back earlier to see whether this was ever in a bear trend. There, if you see here, I am now in on 20th Jan 22. Price is broken below the 200, just gone back, retraced a bit, and it stays firmly below the 200. Not only below the 200, is below the 9, the 20, the 50, the 100, and the 200. Now, 9, 20, 50, right? 9, 20, 50, 100, and 200. So, this is clearly in a downtrend where if you see all these three moving averages sloping downward, the 100 and the 200 are a little slow, so they are not violently going down, but they're still moving downwards. So this is when you can clearly identify using the moving averages that this instrument is in a downtrend. So the 9 and the 20 are for the short-term swing traders. The 50 also can be used for swing trading, but we are thinking now in months. And the 100 and the 200 are basically for long-term swing traders like 6 to 9 months where you have a huge SL. Basically, it becomes positional trading, and the 200 basically is looked at by long-term investors where they may get out if the price crosses 200 from top to bottom because that means that the price is in a long-term downtrend. So we have clearly seen here that the price when the price of the instrument is below the moving averages, uh, it is in a downtrend. When the price is above the moving averages, all these moving averages, it's in an uptrend. And when the price does nothing but just bunches around here, you see here, let me draw, otherwise this will not be clear to you. See what is happening. Nothing is happening. You can say something is happening. I would say nothing is happening. All the moving averages are bunched together. You're below the 200, so you're definitely in a downtrend. You're below the 100, again a downtrend. And in downtrend, what you have now is accumulation. So price is accumulating here. Large orders are, big money orders are getting filled in, and then finally price goes up. Now, if you come here, if I extend this here, Price has gone up for a bit, again come down, but luckily it didn't go down here. And then again now price is in a uptrend. So consolidation also you can figure out when the price is not going up either way up or way down. It's just moving around, stuck in a box, consolidating. And the trend is clearly evident because the price here below is the 200 and the 100. And it's crisscrossing the 920, 50, going up, going down, going up, going down, going up. And then finally it manages to cross the 200 and the 9 and the 20. And it's above all the moving averages. So here price is definitely uptrend. It's in a bull. There you see the bear starting coming down, now gone below the 200, then again. So what we can see here is that the moving averages are an easy way. See the price is in uptrend. Price is coming down here, consolidating, finally taking support in the 200, gone up again, and now the price is in a clear uptrend. And all the moving averages are like taking off like in fighter plane, steeply upward. So the price is definitely moving upward and in a sharp manner. So I hope this gave you a good learning on how to identify whether the particular instrument that you're seeing, whether it's stock, commodity, futures, options, whether it's in a bull or whether it's in a bear or whether it's purely range bound. If you enjoyed learning, please subscribe to my YouTube channel if you haven't done so already, and hit the bell icon to be notified of new videos. If you want to ask me any questions or you want me to make a video on a particular topic, please put in some comments so that I can basically work on what you're looking at. I wish you all the best and I'll see you in the next. Thank you.